now's as good a time as any. And like I said, we can kind of people will come in throughout the conversation, and so we can kind of reintro ourselves and then just kind of continue from where we are. But yeah, thank you everyone for joining. Hope everyone's having a great Thursday so far. Welcome back to NeoInvest's second Clubhouse event. To give you all some context around NeoInvest, we're an enterprise tech startup based out of New York, where we make data-driven matches between early-stage founders and experts in VC, primarily from the perspective of mentorship and feedback on their businesses, but also to grow their investor network, connect them with people that can help them scale up their business. And so we work with a lot of experts in VC, like Lara, and a lot of startups as well. So hopefully this conversation is useful, insightful, and hopefully adds a different perspective to you guys from whatever angle you're approaching it from. So the themes today that broadly we'll kind of be discussing are around VC in general, enterprise tech, even kind of newer VC funds and some of the dynamics around that, and also women in venture, women in tech, and what opportunities they can kind of take advantage of. So with that said, I would love to have Lara kind of give a quick background on herself, and then we can dive right into it. So Lara.
Yeah, hi everybody, thanks for joining. I started my career in product management at Silicon Graphics back in the day, and was in venture for quite a while as a partner at a fund, left the fund, ended up working with U.S. venture partners, was a venture advisor at SRI, and was running corporate development at publicly traded fintech when I got a call from Royal Bank of Canada, which I ended up joining as their head of innovation. And while at RBC, I drove digital transformation for 3.5 years and was recruited to rejoin the venture ranks a couple of years ago. I'm one of two partners at a fund called Silicon Valley Data Capital, and that's just a little bit about me.
Thanks a lot. And yeah, Lara's background is very illustrious and diverse, and we'll dive into some parts of that later on in this conversation. So today we wanted to discuss a couple of things. Enterprise tech as a space has taken off in a big way over the last few years. More than that, actually, businesses are realizing that tools that can help them make better decisions are critical. Startups are realizing many gaps exist in the current framework of how industries, particularly legacy industries, operate, and so on. So we're lucky enough to have a unique perspective from Lara, who's been named one of Silicon Valley investors you need to know, and hope you guys enjoy. So we'll get started with kind of the first couple of questions around SVD capital and what you're looking at. So Lara, I wanted to hear a little bit more from you about sort of given the emergence of so many enterprise tech startups in the market today with applications for everything from decision making to CRM to customer acquisition. Do you see any consolidation coming in the future, or do you think enterprises will kind of use a fragmented set of companies, of subscriptions for all these various use cases?
Look, I think, certainly every CIO you talk to does everything they can to, streamline their vendors, right? Nobody wants to use 100 different vendors for everything, or if you're a really big bank, God only knows how many vendors. I'm not even sure I knew the number of the count across RBC. However, a lot of times vendors offer solutions that don't always work or don't work as advertised. If you take, so for example, when I was at RBC, we, rolled out, believe it or not, we were still rolling out Salesforce to parts of the bank even, 4 years ago. And you could say, well, gee, Salesforce has, Einstein as a way to use AI to better populate, Salesforce. Well, it didn't work. It doesn't work all that well. And so I think, and that's a theme I'll get to later about CRM and where opportunities are. But so I think as much as there is a desire to, streamline vendors, I think that when people have, needs that aren't being met by incumbents, they're still going to search out other solutions. So that I think even if the desire to minimize is there.
Got it. No, that's super fascinating, and yeah, one key thing for many enterprises today is firstly making sure they're constantly on the hunt to figure out the best product for their particular issues that they're facing, how much it can be customized or how much it doesn't need to be. But I mean, have you guys thought about, and given especially your role as head of innovation at RBC, like how you work with corporations perhaps to help them find innovative new startups, or even at your time at RBC, obviously you were leading a lot of this. Like how do corporations typically find those startups, and startups also make those B2B sales?
That is a great and complicated question. So I would say that the short answer is typically not well, sort of either side. So there's a lot of and there's a lot of what I call innovation tourism that takes place. So I was speaking to JP Morgan's asset management business when I was at RBC running innovation, because the capital markets folks, especially the equities folks, said, hey, a lot of our clients have the same challenges. Of course, JP Morgan Asset Management did as well. And here are senior executives at JP Morgan Asset Management telling me how Mary Erdos, heads that division, was going to go on a trip and go to Andreessen and a bunch of other things. And I'm thinking to myself, that's great, but like Mary Erdos isn't choosing technology, guys. That is innovation tourism. And as a startup, you obviously don't want tire kickers. You actually want people who are going to buy. Sometimes things are driven top down, but it's not very often, and it's probably not through that kind of trip. Better if it's somebody who actually has the issue. I will say though, that said, sometimes you look at this happened to me. The then head of global markets and treasury and investment banking, treasury investor and treasury services, had, I guess, gone to an RBC client, seen a video solution that did a nice job of marketing whatever the client's services were, and he's like, oh, we need that at RBC. So go make that happen. And so the procurement people called me up and were like, we need help. We need to find a vendor. And that guy can't actually do that. But that's pretty rare that it would be top-down driven that way. In general, you really, as a startup, you want to get to a business user who actually has the need. As a large company, I think one of the hard parts is they don't. I guess let me back up. When I joined RBC, I got a call from Angela Strange at Andreessen because she had recently met with Dave Mackay, the CEO of RBC, and she called me and she said, Dave Mackay is looking for you, but he doesn't know how to find you, because he wanted somebody who worked in large financial services before, who'd had big technology operating experience, preferably line experience, as well as venture experience. And I can explain why all those three, and it turns out those are hard to find. But to try to have, for big companies, they need people who are familiar with startups, who understand the local community. I think one of the challenges with respect to many innovation initiatives, and I saw this across the bank, I cannot tell you how many people had innovation titles who had failed at something else, somehow innovation was going to be easy, and failed traders, and I'm like, are you kidding me? And that's also part of why a lot of these innovation initiatives don't work. You as the if you're a startup trying to sell, you're kind of trying to figure out who's on the other side of the table. Are they serious, and are they going to get, do they have a real business need for this, and how do they perceive using it? I think those are all kinds of questions. It's a little awkward, but you kind of have to run to ground fairly quickly to figure out if somebody's real.
Yeah, definitely. I mean, a lot of the issues, I guess, with B2B sales come down to firstly figuring out the right point person, then figuring out, do they have a large enough need for the solution or a big enough problem, and then it's actually selling it to whoever their higher ups are. And and that's kind of what takes a good amount of time. But I guess in fact it's interesting because as NeoInvest scales as well, we plan to expand kind of some of the use cases, and one of them is just using the data driven matching to match startups with people who are relevant people at these corporate ventures or at business units of corporates, because it's a huge issue for enterprises or for startups that are building good enterprise tech but just can't be found. I guess shifting gears a little bit to something you previously said around the CRM is part of where you see the opportunities. I mean, what do you think are the most compelling opportunities within enterprise tech that you're seeing today, and also what are some of the sectors that are nascent today that you think will expand massively over the next few years?
Yeah, this isn't necessarily nascent, although I haven't seen much that does this. I can tell you that, especially in legacy companies, people have spent tens of millions of dollars deploying Salesforce. And they had thought, gee, if I deploy Salesforce, like all of my unified view of the customer issues and are going to be solved. And it turns out like Salesforce is now pretty complicated. It has a lot of really valuable information that you can't necessarily access, and sometimes it's missing information. And so I would say solutions that make your CRM more valuable are very desirable, particularly if you pitch them that way, because I do think that I've talked to C-level executives across especially in financial services, this is a huge problem for them. And I think one that continues to be really challenging. I think data governance, who has access to what, how do you share data in, especially in regulated industries, healthcare and financial services in particular, how do you share data but maintain privacy of that data? Data observability is certainly an area I hear a lot of interest in from enterprises. Those are some areas where I think there is a fair amount of headroom. And by the way, when I think about things like making your CRM more valuable, whether it's access, Gainsight sort of did this, trying to create a layer across your CRM to make it more actionable. But it's even things like populating. How do you populate it? Because salespeople don't want to enter a lot of stuff in a keyboard, and your CRM is only as valuable as the data you have, and there's so much that's missed because of the difficulty in populating. So I've seen some interesting things around, well, gee, if there was one company that said, gee, we have a sales process that's supposed to, at step 5, do a demo, and it turned out like a third of the people weren't doing that. And so, how do you start to, if you've got a suggested process, it's not being followed, there are all these kinds of things that I think are real opportunities for startups. So when I say making your CRM more valuable, I'm speaking very broadly.
Sure. That's super interesting, because one component, obviously, with a lot of this is the data that actually goes into it, and the quality of that data will partially determine the quality of output and also whatever the enterprise is using it for. If it's some type of decision making, then it really depends on the quality of the inputs. And so, that's super. I'm also just trying to think on the fly in terms of what that looks like in an actual solution. When looking at your portfolio, I had seen sort of a couple of companies across verticals, but do you guys have a particular focus when it comes to enterprise? And I was curious about how you view blockchain as a component within that. And I mean, just from your perspective, do you think it'll be a big part of how corporations build out their infrastructure over the next 5 years? And if there is going to be adoption, is there going to be like a catalyst for change, or is it just going to be something that happens over time?
So that's a great question, and so I'll try to answer in order. So with respect to the portfolio, like everybody, we're a seed and early stage investors, so we'll invest as early as a couple of folks with a piece of paper and an idea to, somebody in the market with a product and some customer traction. And, obviously every venture capitalist looks for, big markets, big problems, differentiated solutions, hopefully with entrepreneurs who you obviously believe in and are compelling. And I would say that, we've done that in a variety of industries. We try to, obviously validate that it's a big market and that there's a real need. I think the hardest thing for startups is to really focus on the strategic value they provide to their clients and their customers. And by that, I should explain. So, a good friend of ours out of the fund, a good friend of mine, was the first investor in Oracle, Informatica, and Business Objects. And he described, Oracle. He said, people said, why, he asked people, he said, why do you think Larry Ellison was successful? And I said, he sold a database, blah, blah, blah. He goes, no. There were other, relational databases in the market when Oracle started. What Larry Ellison had great insight to was that his client base hated IBM because they made you buy their hardware in order to access their database. And so what Larry Ellison went out and sold was freedom from the hardware lock from IBM. And that, almost everybody misses that, right? And so, to reframe the question of what strategic value are you providing to your clients, right? It makes people think about it differently. So we care a lot about that in terms of how do you define that and is that compelling? With respect to blockchain, I sat on RBC's crypto asset oversight committee, and frankly, RBC was one of, I think, the first to experiment with blockchain. When I got to the bank, RBC had deployed a solution for tracking. And this was very smart to do it in something that isn't sort of in line. They were using a blockchain solution by a company called Manifold to track loyalty points. And I thought that was, a super smart thing to do, just to experiment with it. It's not a huge part of our mandate. I do look at blockchain technologies. Do I think it's going to be a big part of infrastructure in the next 5 years? It depends on the company. I'm not a tech-first kind of person. I really try to say, and part of the reason my effort to drive digital transformation at RBC was successful is I start with what the business problem is and then look at what the most appropriate technology solution is. I do think, right, and I think that there are, the most interesting thing when I saw at RBC, I'm going to blank on the name of the company because I just had it, of course it disappeared. There was a company that was focused on doing equity swaps on the blockchain and had done a pilot with like Goldman, JP Morgan, a big Canadian pension plan, and others, and, trying to rip out a bunch of back office costs. I thought that made some sense. But, some of the stuff going on DeFi and people saying, oh, this is going to replace big finance, good luck with that. If you look at, say, a bunch of the things going on in DeFi today, you have a lot of loans that are over collateralized because people don't know the counterparty. So that's sort of the opposite of efficiency. Do I think that other related technology, are other technologies going to be deployed? Absolutely. I think there's huge demand. Like there's a really interesting company I introduced about a year ago to my colleagues at RBC called Fireblocks, which is doing custody for large financial institutions with crypto assets. Like, I think that's a really important area, and that's a very cool company. And there are, big problems left to solve, in crypto. The most sort of important one that people are, by the way, solving, if you think about, sorry, I mean, this may be too much around crypto as opposed to blockchain, but the current problems with Bitcoin in any case are scalability, right? So the second big problem is and the creator of Bitcoin kind of never imagined assets versus money, or a store of value on the chain. And the creator of Ethereum, that's really a Gen 2 network. Assets and currencies are tightly coupled. Gen 3, which is really where the promise is today, is cash on one ledger, assets on another, and connect them in real time. And there are people who know how to do this, and that's pretty interesting. That's why a company called Blockstream is pretty interesting. That's in Canada. Sorry, you didn't ask about specific companies, but I figured I should throw that in and let you know.
No, definitely, and and for specific companies, it's actually really useful because, like you said, you have to think about it from from the problem, also from the solution. And every solution at the moment, within crypto, you have all kinds of different use cases and applications for some of these cryptos. Everything from privacy to data transfer to lightning fast to decentralized, somewhat centralized. And so, like, I mean, a lot of those nuances actually end up being the make or break for whether something's adopted or not adopted. I guess just even coming broader than this, look, we all know that there's a lot of money in VC right now. I mean, what do you think the consequences of this are? Do you think it's spurring innovation, just making valuations higher, or something else? And are we going to see this influx of new capital end at any point?
A great question. People have been asking that question for some time, right? So, so if you go, so we've been in a crazy bull market with respect to venture and high growth tech companies for really since sort of coming out of the financial crisis in 2009, 2010. It's a very, very long sort of bull market within that sector. And the reason for that is you had central banks for a long time operating in lockstep, making interest rates zero. And I apologize for the vulgar term, but investors are whores for growth. Everybody wants growth. And where am I going to get growth? And one of the only places they were getting growth was, tech and, biotech, that related, sort of technology broadly. And so money flowed in. And even though it sounds, this doesn't sound right because you go, gee, early stage venture, you're investing so far ahead, it shouldn't be so tightly correlated with the NASDAQ, but that is not true. It turns out early stage venture activity is highly correlated with what's going on in the markets, in the equity markets in particular. And so as a result, you've had, fixed income hasn't been very attractive. And so that people have gone, okay, we're just pumping all our money. I mean, if you look at the multiples, in the public markets, right, they're crazy for tech. And that has, I think it's unfortunate for everyone, of course, gone into the private markets as well. I mean, last week I talked to a company that I'd met through, a pretty well-known accelerator that you're going to love this. They have 5 beta clients. They think they're planning on converting those very conveniently, since it's now October and January. They assure me that they're all going to close because, that always happens. And the company is wants to raise $20 million on 80 pre. And this is not a serially successful entrepreneur, in the same. And you're kind of going, great, let me know how that works out for you, right? And so, and there's a lot of this. I mean, I'm not going to bore you with 100 stories like this. There are many, but that is not healthy. It's not. I know it's not with a VC hat on. That's just not healthy for anyone. Ultimately, if the startup doesn't deliver, it's not healthy for the startup, because they'll either go out of business or be recapped in something really punitive. So, I don't know that they'll raise, at 100, but that's just nuts.
Yep, I would agree. And in fact, I think everyone has these stories. We just spoke with a CVC a couple of weeks ago, and they were about to close a deal for pre-rev company, basically MVP, at a 200 post. So I mean, yeah, it's going nuts right now.
Sadly, I'm old enough to have lived through a couple of these cycles, and when the music stops, right, it's it usually gets pretty ugly, because bull markets, in spite of what people think, don't tend to continue forever. So but look, the Fed's pumping a lot of money into the system, and the big question is, when do interest rates rise? Because friends of mine who are infinitely smarter than I am at managing assets for institutions and ultra high net worth have told me they said this is all about interest rates, and when interest rates move and increase, he expects that the equity markets will drop by 30% or more, and that will have a chilling effect on all of the private companies and venture capital, of course. When that happens, I don't know. You should probably watch Bridgewater, because they are better at predicting these things than anyone else. But but I also think the unfortunate thing about these kinds of valuations is it has changed a lot of who starts companies and why. I call it Sherman McCoy comes to Silicon Valley. Which, if you read Thomas Wolfe, you get the reference, and if not, like, probably not. But anyway.
In fact, I like the comment about Bridgewater. In my first job, we used to monitor their hedge fund, and one of their funds is basically an all-weather fund, and it does exactly that, right? It's specifically using multiple factors to make sure that it can beat market in a bull market, in a bear market, or whatever it might be. And so, yeah, that's definitely a leading indicator. And some of these quant funds as well, when you look at kind of their performance and also what factors they're altering, not like that's public information, but to a certain extent, if you see the performance, then it's a good leading indicator of things that are changing. I guess
it's the best I can come up with.
Yeah. On kind of this whole environment, do you have any advice or any way you think a founder should be thinking about raising money in this environment? Do you think they should be shooting for larger rounds regardless of their funding needs? And how should entrepreneurs think about raising money today?
Look, I always think, if people want to throw money at you, it's always a good, you can say, gee, it's always good to have, enough for a rainy day. But I love what the best man at my wedding, who's a serially successful entrepreneur, said. He goes, too much money makes you stupid. People tend to get careless with it. And so I think the answer is, you should raise what you think you need to be, successful. And if people want to, offer you nutty money at, ever increasing valuations, that's, it does come down to being a personal choice, but, people tend to get for right, wrong, or indifferent, people tend to get pretty careless when that happens, and, spend money in ways that, may not necessarily be generating value for all the shareholders. And there does tend to be a certain amnesia about the fact that, raising money is not the holy grail. Generating a return on that money for all of the stakeholders, including yourself, is. And if you think you can do that by raising, some crazy round, Godspeed, but that is not necessarily been how this has all worked out.
Yeah, definitely. I agree with that, and a little later on, would love to open up the floor to see whether anyone kind of has different views. But even for us, kind of, I think it's very important to know what you need and model it out accordingly, and not necessarily get swayed by a lot of money. Mainly because usually that'll also lead to more dilution. But even if it doesn't, it's kind of like not necessary at that particular point in time. I wanted to kind of switch tact to something else that you seem to be quite involved in, and also, to be honest, a role model for many women out there. You've had a long and diverse career in operating roles, investing, and board roles. And as a woman, you've faced much tougher odds than most others. Firstly, congrats on what you've achieved so far. For any women kind of listening to this today and in the future, do you have any advice on how to take advantage or kind of do well in the current environment to become successful?
I hope it's not environment dependent, or at least I hope my advice isn't environment dependent. I think that, and you're kind, thank you. I think for a woman or an underrepresented minority to be successful, David Liddell, who's a longtime partner at USPP, once told me, he goes, look, you guys, I always love to hire women because for you to get as far as you have, you've got to be really good. We don't, the market isn't very forgiving, which I think is sadly true. And I think that depending on what, no matter what it is you're trying to achieve, whether you're starting out as an investor, whether you are an operator, I think that a couple things are always helpful. One, I think male, female, anything, I think having what I think of as a personal board of directors is very helpful. Those are people you can go to, hopefully who you're not, and I would say people you're not currently working with or for, but they are people who whose advice you trust and can always trust to want to, for you to be successful, so that if you have either hard decisions or challenges that you can, great opportunities that you can go to them. I think that's a very important thing to do. I also think women tend to, and I'm not a person of color, so I can't speak to this for underrepresented minorities, but I think we tend to put ourselves last, so we aren't necessarily as good at building a network, having lunch with that friend of yours from business school from 10 years ago. And I think that's terribly important. There are a lot of work, opportunity, et cetera, that happens because, you just ran into so-and-so. And I think that is something that's really important. The care and feeding of your, I hate to use the word network because that's such a pejorative term for this, but I think that's always important, because whether you're trying to sell a product to someone, get financing, hire someone, these things are done through people. And so, care and feeding of your network is really important, and not something to think like, I'll do that next week or next month or next year or when my kids get bigger or whatever the issue is. So I think those are really important. And finally, if it's that you're thinking about moving, starting a new job, or whatever, you want to always, I always recommend this. You always have to think about hiring your boss. And if you're a woman, I always recommend trying to figure out what your boss's wife does, because that'll tell you a lot about how well they deal with strong women. I have always found personally, I have done better with men who have working wives. If they married Barbie, it didn't tend to go well for me.
Yeah, I mean that makes sense. I can definitely see the correlation between that and also then in a professional environment, being able to have constructive discussions and make decisions like that as well. What's really interesting today is you're seeing a rise in self-made women. Like even just yesterday, Sarah Blakely selling part of Spanx to an all-women team at Blackstone. Whitney Wolf from Bumble, Melanie Perkins, Canva. Do you think anything has changed today from 10 years ago that is sort of, I don't know, been different about the environment or the infrastructure today that may have not made this possible a while ago, or has it just been like more innovation?
No, I think a lot of this is, like many things, is driven from the top down. And so you had Goldman, for example, was the first who went to all these private companies and said, "You have no women on your boards. We're not taking you public." NASDAQ changed its rules, right? California has rules about directors. And, I think if you have a group, a monoculture at a board level, you're going to have a monoculture at the company level, because people don't even notice, right? That, we're talking to an all, purple team, right? And so I think that really changed things, because then it's sort of like, well, gee, where are women on the board? Where are women on the executive team? I still think it's pretty. So I think that's great, and honestly, long overdue. But I think that's changed changed things both for the boardroom, as probably also for a lot in the executive suite. I think ventures. Increasingly, we do have more women, still not enough. In the founder ranks, it's still pretty woefully inadequate. Now, Sarah Lacey, a pretty well-known journalist in the tech space who's a friend, hosts these dinners. She calls them the 3% Club. And they're for women investors and founders. And the number 3% is because that's the percentage of venture capital that goes to women-founded companies, right, a year. And it hasn't moved much. We have a lot more work to do there.
Interesting. Do you think the strategy of like VC funds that are only focused on women or on minorities, do you think like that's what we need more of, or is it more like a structural shift by any VC, which is just that, look, we don't honestly care where that founder comes from, what their personal kind of demographics are. We care if it's a strong and determined person, if they're gonna do well, and if we're gonna perform as a result of that. I mean, do you have any particular ideas or things you support in terms of how to change things?
Yeah, I don't think that saying, "Gee, I'm only going to back, women. I'm only going to back X or Y" is great, because I think you really want to back, especially if you're an investor who's, really you're a fiduciary for your limited partners, right? I think your mandate is to try to make money for those folks. That said, I do think you're more likely to invest in, if you're a venture fund, women, if you have women at the table, just because you see the world differently, and that is, that's a good thing. But no, I don't think that saying, I don't think saying, "Gee, we're only going to fund, X" is great, because in fact you could end up with a really unfortunate situation, which is, "Gee, we only funded women, and what if the fund doesn't do well?" And then somebody goes, "Oh, well, that's just proof that this doesn't work," right? So I think that can get dangerous, right? And that would be a disaster.
That's true, actually. I didn't think about the inverse side of things. I mean, even from my perspective, I think what's really important and the fundamental aspect of this is that just people don't discriminate, right? And you just kind of think of it on objective qualities, like you said. For a fund, one of your primary goals, outside of if you have like kind of a sustainability fund or anything else, is to make money for LPs. And so like, kind of, what's the best way to do that? And if it happens to be a woman founder, that's amazing. But not necessarily, I guess, kind of limiting your whole universe to that. I think that is a good point. That's quite nuanced. I think the last part of kind of this discussion before we open it up for questions, which I want to do, because there's been a couple of people in the audience that have listened to a lot of this discussion, and so I think it'll be great to hear from some of them. But so firstly, on the fund itself, it's a relatively new fund in the market. I mean, how hard did you find it to build the fund, and any useful tips out there for people raising capital today for their own fund?
So my partner had raised the fund a couple of years before I joined. I think the hardest thing for any new fund, though, is really establishing. We talked earlier about how the market is awash in capital, right? So I think the hardest thing, and the good news is that means that capital at some level is a commodity. So I think the hardest part for any new fund, including SVDC, is how do you differentiate yourself from all of the other capital. For me personally, the way I differentiate myself is, this does resonate with founders, particularly because it's quite referenceable, which I think is critical, is that I'm probably the only VC that a founder talks to who's actually been on the buying side of technology as opposed to the selling side. So I actually have a really intimate understanding of how enterprise software gets bought, and also an accompanying network of folks to reach out to help with early sales, which tends to be one of the things that entrepreneurs rightfully should want from their investors. But I think figuring out what your the same way the entrepreneurs are figuring out their unique value proposition, especially as a new fund, what's your unique value proposition is, I think, really critical. And then the hard part is, generating, interesting deals where you're not going to some Y Combinator thing going, "Thumbs up, I just saw that presentation for 10 minutes and I'm going to invest," because God help us if that's really how we're having to do deals today.
Yeah, agreed. And the other interesting thing about like YC in particular is it's kind of risen above the rest to a certain extent now. And it's very interesting because there's so many accelerators out there now, and some of them may have aspirations for becoming funds themselves, but I think that relationship is changing in terms of how funds work with accelerators, and vice versa. I guess just one last question before I open it up is there something you wouldn't tell an entrepreneur if they were pitching you, but you would tell them if you were mentoring them on, say, Neon Best?
No, there are a bunch of people in this room who know me. I'm pretty, I'll use an old Lotus term, WYSIWYG. What you see is what you get. So I wouldn't be cruel to an entrepreneur. I wouldn't tell someone, gee, you're clearly not the CEO for the business. But nor would I say that on your platform. No, I mean, I try to be my overwhelming feeling, for better or for worse, for people pitching me is you've done me the tremendous favor of sharing your vision, your dream to build X. The least I can do is try to provide some advice about, even if I'm not going to invest, about what might make it even more compelling, right? Or what challenge you may run into. And, people can take that or not, but I would certainly appreciate it if people did that for me. So there's really nothing that I would hold back.
Fair. And that's a great perspective. So not all VCs necessarily have the same view, but it's great to hear that you do. I guess with that said, would love to kind of open it up to the rest of the audience. All you guys have to do is just raise your hand, and I'll call you up onto stage if you want to ask Lara or myself a question. But in the meantime, Lara, I wanted to do something interesting, which was a rapid fire round. Just kind of hear your perspective on a couple of things that obviously you hadn't prepared for. So the intent is to kind of just have like very quick answers, just like a word or two, and hopefully it gives us some unique perspective on you. So let's go. One product you can't live without.
My Tempur-Pedic mattress.
Your favorite app that not many people know about?
Haiku Deck. It is actually a lifesaver for me for creating presentations because it limits sort of, if you will, a little bit of the format, although you can now export it to editable PowerPoint, but it enables you, if I'm doing speaking, I can type in Mark Benioff and I'll get an image of Mark Benioff, or when I presented to University of Michigan about how venture capitalists see you, I sort of had a slide that said portrait of an investor, a visionary sheep, and the thing was smart and it pulled up pictures of sheep. So it really helps you save time on finding images, which most people probably on this call, on this Clubhouse, know that that's super time consuming. So I cannot recommend Haiku Deck enough.
Oh, awesome. That's super interesting. So with one thing on your bucket list.
Oh gosh, going to Egypt. Never been, on my bucket list.
Likewise. Number one productivity habit or hack?
Great question. I'm not always good at this, but I really try to touch, say, an email or something only once.
And that's like what Cal Newport's ethos, effectively. I think I've tried doing the same, and it's really helpful.
It is.
One silver lining to the COVID lockdown.
Spending more time with my family, although since I have twins who are 15, my guess is they don't view that the same way. But
it's all right as long as it's one way.
Yeah, exactly. It's a silver lining for me, just not sure it's reciprocated.
I'm sure they feel the same.
Yeah, I'm not so sure, but anyway.
Would you rather have, and this is ceteris paribus, money or influence?
Boy, that's a great question. Sadly, I think they're very related. I think influence is something a lot of people buy through money, but I probably would rather have influence.
Likewise. Nice. Favorite podcast? If you listen to podcasts.
Oh, I do. I love The Daily, and I listen to that pretty religiously. I love Pivot with Scott Galloway and Kara Swisher. And although this is not a long-term podcast, but I cannot encourage people enough to listen to an uncomfortable podcast by Serial called Nice White Parents.
Yeah, I'd love to check out what that is. Most inspiring person for you in business or tech today?
That is a great question. Seth Klarman, he runs the Bow Post Group in Boston. He's considered to be the second most important or second best value investor in the world behind Warren Buffett. I happen to know him personally. I'm lucky that way. He's a section mate of my husband's. And he is an extraordinary person, not only because he's produced amazing returns over, since he started in business in 1982, but because he is one of the deepest thinkers I have ever met. I guess in tech, I'd probably have to say Reid Hoffman.
Awesome. But there are only three more, actually. But
sure.
Best industry to work in right after college?
Oh, gosh. I think... I actually think if I were right after college, I think working, whether it's tech, biotech, I would try to do that at a company that's big enough that they actually have systems to train you, as opposed to going to a startup where they just show you the deep end of the pool and wish you luck.
I guess on that note, sorry, this is a little bit of tangent, is what do you think about, and I know you're associated with HBS, but what do you think about like entrepreneurial programs at schools or universities? Like, do you think that is the best way to become an entrepreneur? Or, I mean, I guess just in general, what do you think about them?
With all due respect to my alma mater, and I sit on the alumni board, so this is certainly not BS. No,
you can feel free to refrain from that.
Yeah, no, I don't think. I mean, Reid Hoffman, I've talked about this before, right? His view is that, pretty risk-averse people to go to business school. I think that's right. I don't think going to an entrepreneurial program, in fact, I view that as a bit of an oxymoron. I don't think you want to do that. I think if you really want to become an entrepreneur, I would do what I said I do after college. If you say you're really interested in computational biology, join a big company that's, touching that space and go learn something. You want to do something in enterprise, whether it's SaaS or whatever, go to Salesforce, but it doesn't need to be that big, but go learn something. And then, hopefully you'll meet other people who share an idea. I don't think you go learn to be an entrepreneur at any particular program. I think you learn about, market needs and what the functional skills are necessary to succeed in a given industry. And, unless, you're struck by lightning and decide you're going to do the next Snapchat, in which case other parents of teens and I will be not be your best friends, but, have at it.
Yeah, no, that's interesting. I mean, what do you think about the view that, look, I want to start something, but I'm going to like an HBS or a Stanford GSB to meet my co-founders effectively. And I mean, it is a melting pot to a certain extent of people with similar backgrounds, but like you said, they also have that certain characteristics, of not just going out and doing it. And so there is that sort of risk averseness. I mean, do you think that's a valid view, or even that you can kind of just get from operating in like operating environments?
Well, I'm going to speak here about just sort of traditional tech companies and quote Dave McClure, who I think is a really beautiful quote. He said, to start a company today, this is going back 10 years, but it's still true today, you need a huckster, who's, typically the CEO. You need a hacker, obviously, who's the CTO, and you need a hipster, who is the design person. You'll meet lots of hucksters in business school. It's pretty unlikely you'll meet a hipster or a hacker. So I would say if that's really what you're looking for, that's probably not your best stomping ground. You're probably better off spending time in the D school or the engineering school.
True. Fair. I guess two last questions
Sure.
Here, and then I'll kind of see if there's anything from anyone else. Is Best thing about being a mom?
Oh my gosh. Best thing about being a mom is you hopefully are taking part in the development of like just two amazing, the most amazing people I know. It's a really indescribable. It's an indescribable experience.
Interesting. And yeah, I mean, and like many people have said, it's very hard to actually convey to people that don't have kids, for instance, what that feels like. What's something you learned from your kids?
Oh God, I learned about Discord through my kids. I learned about all kinds of new music from my kids. and sadly, because at least in my daughter's in 10th grade, I've learned how stupid I've become. She's taking a micro econ class, a study class, which actually happens to be my major from the University of Chicago, which is often thought to be a reasonably good school for the subject. And she came back and said, "Oh, I'm running these simulations about the prisoner dilemma, introducing noise, meaning your opponent may have made a mistake. How do I come up with a winning strategy?" I'm like, huh? So I'm like, I'm sorry, and you're doing this as a 10th grader. So I've learned that knowledge is fading.
Wow, that is a very interesting twist to what we had as well as the classic sort of prisoner's dilemma. What do you do, and how do you basically come up with the right decision based on expected probability?
Yeah.
Super. No, that was kind of fit on the rapid fire. Anyone in the audience, feel free to kind of ask a question. Lara is one of the managing directors at an early stage venture fund, and we run a company called Neonvest out of New York. But otherwise, Lara, it was great to speak with you. Great to have you on, and thanks a lot for taking the time here. I think these were some really interesting perspective and insights, and hopefully people learn a lot from it.
Oh, it's really my pleasure. It's great to see everybody.
Great. Yeah, no, thank you, Lara. Great to speak with you, and look forward to having you add a lot of value to the Neonvest entrepreneurs.
Oh, it's great.
Shout out, by the way.
No, it's true. I mean, I think you guys provide a really valuable service to the entrepreneurial community, and so it's been a privilege to be part of your platform from its early days. So, well, thanks to everybody for joining us. I really appreciate the opportunity, Aakash and Surya. So, thank you.
Thank you. Great to have you on, and
thanks, Lara.
Everyone has a great rest of their Thursday.
Cheers, everybody.